Okay, welcome to today's podcast with Invest in You. Today we have got a broad range of geographical areas represented. So myself, Fredrik and Sandvall, I'm calling in from Asia. Ivan, where are you today?
I'm in Sweden, in Skinnskatteberg, a very small little town here.
So that's Europe
3,000 people.
represented. And Axel, where are you dialing in from?
Pleased to meet you. I am dialing in from California in the United States.
Great. So without further ado, let's jump into this podcast. I am very pleased to have Axel Merk as a guest. He has been working with investments for many decades. Roughly the same time as I joined the military, he set up his own company, which means early 90s, without being too specific. I know the year, but it's not the detail which is most important. And he's been working with investments ever since. I can guarantee he also did that before this time. So one reason why this is extra exciting, he is focusing on gold, precious metals, and while we are recording this, we've had maybe the last 10 days, the most exciting days in the market for quite some time. So Axel, welcome after this long introduction. How are you doing today?
Well, we live in interesting times, so
Yes.
gotta doing great here.
Yeah, no, it's really good to have you here. And without further ado, let's jump into the most recent week. So we have had quite a lot of news happening. Ivan, can you take us a little bit through the last few days' news in terms of focus on gold and silver in particular?
Well, the main thing is
Yeah,
that nothing has.
Yeah.
Sorry, Ivan, I'm stepping on you.
Ivan,
Go
if you
ahead,
just
Ivan.
frame it, then
Yeah.
we pass it over to Axel, please.
Okay, yeah, but well, from my view, gold and silver have been moving up extremely quickly for the past few weeks, especially. My portfolio, which contains some mining stocks and things of the sort, has just been going straight up for weeks on end. And I think around Thursday last week, silver especially, but also gold, had a very large correction. And that was very interesting. And I believe the bottom was around Monday this week. And now we are looking like we are recovering, or at least stabilizing after the major sell-off.
Yeah, so we're going to zoom out a lot more, but let's have your comments as well on the
Yeah.
same events, please, Axel.
Well, the main thing is that neither silver nor gold has changed. The perception of silver and
Yes.
gold changes. I like to just throw that out there because we get all excited
Yeah.
about these price moves. We up for the month of January, I might add, right? In the price level, I'm talking from a dollar perspective, but I believe that's the same in most other currencies. So and if the astonishing run up in silver was in part probably caused by a short squeeze. I like to point out we're dealing in physical goods. And so the small print matters in these things.
Yes.
Asian investors in particular, China only has a derivatives-based silver ETF that was trading at a dramatic premium. And when you have these products, you have market makers trying to figure out how to hedge themselves without having skin in the game, and
Yep.
that can cause significant distortions in the market. And we feel all excited about it one way or the other, but that's part of the reason why I'm telling people the gold hasn't changed. It's just our perception of it that has changed.
Yeah, exactly. Let's dig deeper here. So I saw statistics the other day that the derivatives and the papers around silver are worth roughly 350 times the actual physical silver, and the physical silver is in short supply in many parts of the world. So please expand on what's the difference between paper assets on a lower level and then on a higher level. What does it mean?
Well, to just very simply, right? If you have a coin or a bar of silver or gold, it just is, right? But
Yep.
in any market that gets to be more mature, and I mention it in that perspective because the gold investor always thinks that they're special. They're not. You have derivatives markets, and the derivatives markets, the core purpose of a derivative market is for producers to hedge themselves. That it makes production more predictable, pricing more predictable. But in order to have the producer that hedge themselves, you need the other side. You need the speculator who is willing to take a bet on it. And of course, as you have the speculators invest in these products, you can have some interesting phenomena. And I like to point out that several years ago, I trust everybody remembers, we had negative oil prices,
Yeah.
if only
Yeah.
so briefly. And so
Yeah.
these things matter. And to just take it a step further, we talk about gold as if it was a generic thing. When we quote the price of gold, it's typically the price of a London bar in London. And so when a
Okay.
derivative can of course be COMEX, can be another exchange. So when you have extreme volatility, that small print suddenly matters. Again, for the general investor, the gold hasn't changed. If you want to be active in these markets, good luck trading them, first of all.
Yeah.
But then you might want to pay attention to the small print.
Cool. So a little bit here, a question to summarize here. So if the price is set in the paper market, but the real demand lives in the physical world, which one is real?
Well, they're all real. They just have
Yes.
different impacts. But
Yes.
the point is that you can, depending on where you look, you can see what's happening in the market. Let me take an example that many of your viewers are probably relating to. In the springtime, when the tariffs were flaring up, there was a fear that there might be tariffs on precious metals. So you had a flight of precious metals, notably gold, out of London into the US. And it was sent via Switzerland because in the US they don't take the London bars. Those are the big James
Yep.
Bond looking bricks.
Yes.
They need kilobars. The kilobars tend to trade at a slight premium. So the cost of sending it to Switzerland, refining it, sending it to the US is actually an arbitrage. But then there's the small print that a lot of the banks, they hold the ones that make the market in London, they hold some of their gold with the Bank of England. And as your viewers may not be aware, is that having inventory of your gold is actually not quite as trivial as you might think. The modern bullion bank holds gold for a client on a pallet. So your big institutional client, this is your pallet or your series of pallets. And if you sell gold from one client to another, it's taken from one pallet to the other. Well, the Bank of England doesn't do that. What they do is they have big pallets and they note who owns which bar. And so when the gold is sold from one party to another, they make a computer entry that this bar on this pallet now belongs to somebody else.
Yep.
The problem with that is if you have a flight of gold, as you had in the springtime, they can't keep up because they have to find the bar in the bottom right on that pallet and this and that. And so they had a backlog of several weeks. And the bullion banks were scrambling to make sure they had enough gold. Now, they were scrambling, but the market was functioning. And the reason you know that the market was functioning is you could look at the bid-ask spread. Because if you wanted the gold, you would have thought
Yep.
you'd have to pay a significant premium.
Yep.
There was a fear that that might happen, but it didn't materialize. So I mention all that is because you can look at the details of these markets to see what is working, what is not working.
Yep.
But ultimately, yes, the beauty about a shortage of gold is you have this clearing mechanism called the price. And
Yep.
so we can talk about conspiracies or
Yep.
this or that. These are basic functions of the market, and it's easy to complain about these things. I like to try to understand them to make sure that understand what is happening actually.
Yeah, I mean, really well put. To try to be a facilitator, since we're three people on the call here now, Ivan, I give the question and conversation bar over to you, and I will zip it for the next few minutes until you give it back to me. Ivan, over to you.
Yeah, so I was just, well, I wasn't really wondering, but I would like to hear your view on this. When you look at money today, actual dollars and Swedish crowns and so on, what's actually backing it?
Oh, that's a question. Well. The
Yep.
keyboard of the central banks, of course. Yeah, we live, of course, in a fiat world where central banks can create money out of thin air. And when you go to the bank and deposit money, you're giving a loan to the bank. And when the bank goes to the central bank, they don't get money back. They get just a computer entry that they have deposited something. And to just bridge that to kind of the current discussions about central bank independence, what central bank independence is about is whether governments can access, I call it the cookie jar, right? If politicians
Yeah.
were able to just create money out of thin air, then money literally grows on trees, or currency at least. And so that is where this discussion is about, and it's kind of it's a different segment. I don't want to ramble too much on that, but we are what it is backed by this entire monetary system. You can argue is the taxing power of governments, but increasingly governments think that oh you can have zero taxes and infinite deficits, and everybody's going to live happily ever after.
Yeah.
We've had quite substantial deficits in the U.S. For several years, and it is politically attractive to provide social benefits. Um, and we see it with the actual deficit in the U.S. But I mean, you're talking from Sweden. I think Sweden in Europe has the highest percentage of GDP to military spending or production, not spending, just that segment of the market. But if you take Germany, they are ramping up infrastructure spending, they are ramping up military spending, but there is no debate about cutting back social spending. We can have our cake and eat it everywhere in the world, it seems. And of course, there are global dynamics that push us in that direction, but the discipline on the other side of that spectrum is completely lacking these days.
Yes, it's like systematic debasement of the currency, kind of to compensate for this difference in
Yeah.
money coming in to the government and the amount of money that they want to spend.
Yeah, the way I like to characterize it is that the interests of government are not aligned with the interest of savers. Because when you are
Yeah.
spending above your means, you have an interest in the debasement of your currency. And I like to frame it that way because I think the human beings are driven by incentives. I am not a fan of red tape because it's trying to overregulate things. But abstractly speaking, for on the government side, they have an incentive, politicians to get reelected, and they have an incentive that the purchasing power of the debt is eroded so that the debt isn't quite as bad going forward.
And they also need this kind of to be at an appropriate pace to kind of keep everything flowing and going, and to keep everything stable.
Well, that's easier
It
said
has
than
to
done,
be
of
a really
course,
tough.
right? That's easier said than done. The Paul Volcker, known obviously for beating inflation in the early 80s. By the way, when he beat inflation in the early 80s, we didn't go back down to 2%. It took many years. But he talked about three verities to keep government stable. And he was a bit more of a big government guy than I probably am. But he talked about you need sound institutions, you need sound monetary policy, and sound fiscal policy. And of course, on all those three levels, we've seen some erosion, but that's what you need to keep things quote unquote stable and sustainable in the long run. And that's what we should be working towards if we want to keep that system together.
Yeah, if I'm not mistaken, I think the whole 2% inflation goal, wasn't that recently? There was something about inflation averaging, I think, which they wanted to have, and that now they've removed it, if I'm not
Well, yes,
mistaken.
so obviously, if you want stable prices, that should be 0% inflation.
Yeah,
Economists have figured out that if you have 2% inflation, everybody is somewhat motivated to work. Think about like your mouse in a wheel that has to constantly run just to keep steady. And if you go too much, then you can have other negative side effects. And so the under Greenspan, that was somewhat adhered to. And then, of course, we had these disinflationary moves from the advent of technology, and and economists are conflating the disinflationary effects of productivity gains, and at the other end of the spectrum, potential truly deflationary forces that come from a credit bust. And so under Bernanke, when we had a substantial credit bust that would have led to a depression, um, he did everything to kind of stem against that. And Bernanke and then the successors somehow got glued to this 2% inflation target. We didn't formalize the 2% inflation target until Bernanke, in part because it's impossible to actually run inflation to the second decimal point. Kevin Warsh, the incoming Fed chair, is a nominated person anyway, is a fierce critic of being too precise on that. But then what's been happening is because inflation continued to be persistent, then the Federal Reserve came up with this really asinine is a very sophisticated term that central bankers like to use. I can't help it to make that. No, with a backward-looking inflation target, which makes no sense at all. And so that is still on the books, by the way. They don't talk about it anymore, but they in their latest 5-year review at the Fed, they didn't revise that. And so they have this backward-looking inflation target to manage forward inflation, and it was because it was put in place because inflation was too low in the eyes of some of them. The pandemic and notably the supply shock we had kind of yanked us out of that world, and so at least we are ignoring that backward-looking inflation target now. But the debating club called the Federal Open Market Committee has given way too much credence to that.
And by backward-looking inflation target, you mean them trying to average the inflation over multiple years?
Yes, yes, on a
Yeah.
backward-looking, but explicitly on a backward-looking basis. Oh, it was too low, so maybe we should be a little bit on the high side going forward. And that was a bad idea in theory. It's a bad idea in practice, and it's still on the books.
Dad, do you have any comments?
No, just keep rolling.
Have we lost him?
Good flow. So still fire away. I'll be silent for a moment more.
Yeah, it's a very interesting system and a very interesting predicament. And I like that you mention as well the productivity increases as well over time. Because some people claim that, well, we've printed or created this much money over this many years, but not all prices have increased by that amount, and that's because the productivity has overridden that inflation and made it less visible.
Yes, well, there are
But
of
if we
course
were
several
to have
topics here.
something,
Yeah, if I can just briefly comment on, there are several topics here. One is that the way that inflation has been measured has changed over time, and of course, if we use the same measures as we
yeah,
had in the 1970s, inflation would be substantially higher. And the question is, if you don't have a choice and have to buy the quote unquote better thing at a higher price, well, is that it's a that's a difficult metric. I I mean, ultimately, I like to kind of control what I can. The context, though, in today's environment, what the relevance is that um, there is a debate at the Federal Reserve in particular is whether the AI boom is and the deregulation initiative in the US is causing productivity gains. And if so, can you have interest rates lower than they would otherwise be? And what it was pointed to is that Greenspan in the 90s allowed this economy to run and wasn't as tight as others might have had. And so of the candidates that were running to succeed Powell, that Chris Waller, he was arguing, oh, the economy is slowing down, whereas the other candidates, and including Kevin Warsh, was saying, well, we do have a productivity boom, and to put it into context, what Kevin Warsh is arguing is that in order to kind of manage this massive debt that we have, we have to have a productivity boom. That's the only chance we have to deal with this debt. And so instead that way he kind of wants to give this a shot to say, all right, we got to have a productivity boom, grow the economy as much as we can, so this massive debt level is less as a percentage of GDP. So there are real implications for monetary policy going forward. Um, and to maybe just make one additional comment, because people say, oh my God, what's this new Fed chair going to be? And we can talk more about it. Kevin Walsh, not Kevin Walsh, Powell in December when he gave his press conference pretty much presented the FOMC to the successor on the silver plate, because he suddenly started talking about the productivity boom as well, something he had not done previously. So he pretty much kind of said, hey, there's a shoe-in for whoever succeeds me. And you can see that when Kevin Walsh's nomination was announced, um, the markets didn't really move much. I mean, some people say that the precious metals fell based on that. I don't think it's related to that. If you look at what was priced into the markets for the rate path of interest rates, there was no notable change, which I do think means that the Powell has actually achieved in that. I'm very critical of many things he's done, but let me praise him on that. He is achieving a very smooth transition to a successor.
Yeah, to a small transition into something else. I was recently launching a book which is called The Abyss of Finance, which is very much like understanding what is happening behind the closed curtains. How does the financial system work? And same with like cycles. So as part of the research there, and I draw the conclusion that pretty much the gains on the S&P 500 and the total value of S&P 500, if you add the top 7 biggest companies plus OpenAI, the AI product and increase of value is meaning that they're pretty much the same. The top 7 slash 8 are valued the same as the next 500. And coming into that space, many of these huge companies have been around for a while. Just some comments on productivity and AI. Again, as I know it's not your main field, but you are very closely paying attention to the global trends.
So let me give two answers. The
Please.
first one, is on the markets. The other one is a personal one, since
Yep.
you say it's not my main theme. So obviously, as everybody knows, the Max 7 had done tremendously well. There has been significant dispersion of that. If I'm looking at my fancy screen in front of me,
Yep.
and I'm not giving investment recommendations
No.
on these, but as we're talking on February 4 here, during the day, Microsoft is down 15% year to date. Nvidia is down 3% year to date. Tesla is down 6% year to date. And so the other Mac 7 are up year to date, but that we have seen a substantial movement. Some people call it rotation. Fundamentally, some people are arguing that the initial drive was into these Mac 7, but one of the things I've noticed is that something like the small cap stocks have done well. If I look at um, the S&P 600, which is value, small cap value, is up 9% year to date, for example. And so you have the Russell 2000 is doing well this year. And so those smaller cap and smaller cap value do well on the one hand if there is a recession looming, but the
Yes.
other story why they might be doing well is that these tend to be more levered companies, and they might be disproportionate beneficiaries of this productivity gain if you can use AI tools to improve your business. And
Yep.
so where first the big companies that are spending a gazillion in this space were benefiting, it's now trickling out. I think the relevance is, and I don't know where these things are going to be tomorrow, but I think people should realize incredible amounts are spent on this. This is as large as the building of the railway relative to the US GDP in the US. And different from the tech boom, a lot of that is debt financed. And so I think that's another distinction that you have to be aware of. And then the other part I just want to answer, it is correct that we, of course, focus on precious metals. We manage over 4 billion in that space. But We didn't talk about my personal background too much.
Yep.
I actually studied AI back in college many years ago. I have a master's in computer science with a focus on AI. It doesn't mean I know anything about the space, but I certainly have opinions about it.
Yes.
I, I
Love
also
to hear
stu
them.
I also studied public key cryptography in the 1980s, which is the foundation, of course, on how we do secure transaction on the internet, but notably also on digital assets. And so I have monitored this space from abroad. I dabble with this a little bit. I sometimes get to do some programming on the weekend, but otherwise I hire programmers mostly. But I certainly have opinions about this space.
Yes. Yeah, so you kind of like hinted there a bit about like your day job. It's quite substantial. So when I was researching this episode, I found out, for example, back in September you did an interview, and at the time, again, that's September 2025, your fund had pretty much doubled over the last 12 months. And since then, it's gone up another more than 50% further. So you're in the right space at the right time. So yeah, please tell us a little bit more about what is your investment company working with, and also expand also into the tangenting, like both gold, precious metals, but also mining. So what do you actually invest in without being saying something that you shouldn't?
Yeah, so on the business side, we have two public products. One is a physical gold product, and one is a product that invests in precious metals mining companies, where we focus more on the smaller cap companies. And so basically, if you look at the typical precious metals investors, they tend to be either in one space or the other, not in both, because the risk profile is somewhat different.
Yes.
Physical gold has a volatility, historically anyway, of about that of the S&P 500 with notable spikes, and we saw the spike, of course,
Yep.
recently. On the theory on the mining side, before I kind of go into more nuance there, is that you have a leveraged play on gold, because the idea is that the cost of mining is fixed, and then when the price of gold goes up, then you have a disproportionate gain once you go above your fixed cost. In practice, in many cycles, it's not happening, because about a 20% to a quarter percent of the mining cost is energy. Then usually in a bull market, workers want to have more compensation, more higher salaries, and everybody needs them because you have a broader commodity boom. Governments want to have higher taxes. What's somewhat special about the current cycle is that commodity prices are actually quite contained. And
Yeah.
yes, there is some tightness in the labor market in mining, but nothing dramatic. And with some notable exceptions, the governments have been reasonably behaved as well. So a lot of that profitability goes to the bottom line. So
Yeah.
that's the broad context. But then on the mining side itself, it's a very small sector compared to other sectors. And the large mining companies that you get in your typical ETFs, they cannot acquire new ounces in the ground fast enough versus
Yep.
what they're mining. On top of that, because they had overinvested in the previous bull cycle, and investors told them to get their act together, they focused on that. They underinvested, and so now they've been trying to play catch up. But because they're so large, they have invested in, rather than acquiring smaller miners, which doesn't do too much of a dent in
Yep.
their production. They've invested in these very large copper gold projects that have a very different risk profiles, and are sometimes in jurisdictions that aren't very stable. Um, of late, the management has taken notice. They might split them off. But then the space we are in is much more on the junior side. And so when you're more on the junior side, it's much more of a it's literally you're betting on them striking gold. And so it's a much more explosive, so to speak, and volatile environment. The scarcest resource in the sector is good management. And so we think of what we do as venture capital light. And so investing in companies, some will make it, some don't. The good news is that even the ones that don't make it, the gold is still in the ground.
Yeah.
And part of the reason
Yeah.
that we invest in these smaller ones is to just kind of wrap this one up is that as these companies need to go back to the capital markets to finance the next stage of their growth. And as they do that, you tend to get bigger investors in. Think about additional rounds financing and venture capital, and valuations tend to be higher. And so there's an opportunity to capture value that goes beyond just the dynamics and the price of gold. So this is a long way of saying is that yes, we're active in the precious metal space, and I have a great team that helps manage these products.
Yeah, I mean, you point out a number of very important things. So you got the management, and then you got the actual labor, also massive like infrastructure, like investments, often at sunk costs. So like roads, the mines, everything,
Yeah.
and very few things are actually mobile to move to the next location. So mining to start from scratch is extremely expensive thing, which means, like you said, we see more consolidations and acquisitions rather than new entrants. Would you mind to comment on that? How the people with the pickaxes are working?
Well, I mean, you obviously we have a bull market. The funding windows are open, so
Yeah,
good and bad management teams get funding. One thing I might want to add to this discussion as food for thought. In recent years, there was a lot of talk about DEI, that's obviously gotten into disrepute a little bit. The mining sector has always had that because you cannot operate a mine unless you take care of the local community. If you have local backlash, you will not be able to get your permits and successfully execute. And so the mining teams, they have to be able to work with the local communities. If you think about mining happens all over the world, but in Canada, working with the First Nations, the native population there, you need to be able to provide services to the local community
yeah,
and be environmentally conscious, have a long-term plan of what you do afterwards. And so all these things are things that when you just buy your ETF, you don't think about these things, but these are all inputs that need to be considered. And then, of course, the depending on what you people that are in the mining industry, some of them are gold bugs, but most of them, they just like digging. I mean, I'm
yeah.
oversimplifying here. Obviously, they don't really care what they get out of the ground. And so if the hardest thing is this one, they'll switch to that. And so different mining techniques are required, of course, depending on the geology and what you're mining. But it's a fascinating world that very few people know about,
Yes.
both on the investment side, but also on the engineering side. It is much more hip to work in finance
Yeah.
than to study geology. And even a very mining friendly jurisdiction like Australia is not graduating enough engineers in that field. And so it's one of the reasons that we haven't talked about strategic minerals, but it's the same idea, right?
Yes.
You need to mine these
Mm.
things. It, we just don't have enough talent out there to pursue all these projects, and that's a key bottleneck that miners are facing.
So where I am at the moment, within just like not too many hours of a commute around here, it's more than a quarter of the world's population are living right here. And we recently had an armed conflict in an area called Kashmir, where you got very rich resource in terms of like rare minerals. They recently found in March 23 one of the biggest finds of lithium in the world, like basically making India self-reliant for batteries for like
Yeah.
might be worth the same as all the amount of oil in the Middle East, in
Yeah.
theory.
I remember when you called me about that.
Yeah.
You called me and I was
So
out on the lake. I remember
yes.
that.
Yeah. So yeah, let's do a small transition to this strategic importance of rare minerals for everything from aerospace to computing to everything else. Let's do a little segue into that one. Please, Alex, some thoughts at all?
Well, the main thing is that it takes forever to ramp up the production, and
Yeah.
then once you produce it, you still got to refine it. and all the refining capacities in China. And so none
Fair
of these
enough.
things are trivial or can be ramped up overnight. I get the strategic importance of that. And again, right, the world is driven by incentives. And so when the Chinese say, hey, you can't have that stuff, you have an incentive for other countries
Yes.
to get their act together and ramp it up themselves. But those things, all these things are far more um, time consuming than you might think. I mean, you're dealing with physical things of
Yes.
building a mine, building refining capacity, building all that. It doesn't mean it won't happen. But the other thing to keep in mind is that we have moved to a world where economic nationalism is coming to the forefront,
Yes.
which means as an investor, the rules of the game might be changing along the way. So you could have a brilliant analysis. I mean, just think about what happened in 2008, right? This and that is going to happen.
Mm.
Well, the government can change the rules of the game, and
Yep.
your brilliant idea is suddenly worthless, or worth at least a lot less than it was before. And
Yes.
so I just like to caution people that when they invest in these things, it's sometimes not quite as trivial. The other part, though, on the positive side, sometimes people think, oh, I want to only invest in a completely secure jurisdiction. Well, first of all, what does that even mean? The rules change in the US as much as
Yeah.
in any other country, and just look at tariffs, and you know what I mean. But you have to have a change in
Yeah.
administration. The rules might change. When you deal in a jurisdiction where you have an autocratic government, well, then you have one point of contact and you actually might get things done. So it's not it's a little bit more complicated than saying I'm only going to invest in this jurisdiction and that jurisdiction. Also, if you invest in a less stable jurisdiction, you might get a much better price
Yep.
because that's things are priced into that. And so if you have a faster return of capital, that might be worthwhile. And as part of the reason why on the oil industry, the multinationals are sometimes willing to invest in some of these other jurisdictions. So I'm not making a recommendation to do one or the other, but I just like to have people have an open mind that ultimately there is no safe place for your investments or in mining,
Yes.
and
Yeah.
diversification might ultimately be key. Being and with hindsight, you always know where you maybe should have been. A few years ago, West Africa was a good place for mining. These
Yep.
days, that's not such a great place. Mexico, people didn't know how would the new government do it, and people have turned much more optimistic about it. And so these things are evolving, and and it's uh, yes, we have our views, but ultimately you got to just work with the facts you have on the ground.
Yeah, no, exactly. And also I work on the diplomatic and strategic level where I pay attention to through intelligence what is happening in the region. Just cycling to the office today, I cycled past the parliament here. You can see like there's yet another state visit between this country's leaders and the neighboring country. And that's happening every other week where you got another state visit. And we see also very big power plays, of course, from the president of the USA. So the macro things are very hard to keep track of, and the volatility in stocks, shares, and commodities is yeah interesting. Ivan, I'd like
Yeah.
to invite you to ask about anything at
Yeah.
all that springs to mind.
Well, this is more of a comment than a question, but like you were talking about, when you're an investor, you can't just only look at the free market side of things and what people want and those type of things, because there's also a completely different paradigm where governments can just stop things and change things immediately, or people can, like Trump can say something, and things can happen not only from a free market side of things, but also like legislatively or from the state that just can completely flip your idea on its head, which is a very difficult environment to invest in when someone can just say something and a bias can flip completely, or a country can change its mind on something, and the next 10 years are going to be completely different than you had planned, and so on.
Yeah. Well, think about it how, again, what motivates people. They have a profit incentive. And so if you
Yeah.
if you want to sell to Americans and you are hit with uncertainty, there, there are a few things that's going to happen. One is you got to figure out how to deal with the facts, right? You're going to change your procurement channels, and big business is better equipped to do that than small business. By the way, one of the reasons I'm not a fan of tariffs is because small business is losing out, and small business, of course, the future of big business, mostly, in part because small business doesn't have a lobby. You may remember how Apple got exemptions because they big enough and so forth, right? The tariffs kind of literally the current administration is one of the themes is you have to drain the swamp. Well, tariffs do the opposite because you're
Yeah,
encouraging people to lobby for whatever your
that's
things are.
very
But the other
interesting.
things, yeah, the other thing that's going to happen is when you're faced with fairly substantial changes in policy and unpredictability, well, you're going to control what you can. One of the reasons I believe that job growth has been lackluster is because that is one area you can focus on. You can try to contain your costs. Of course, you can maybe get your inventory in earlier and then see what's going to happen. But one of people are going to be reluctant to hire people when the rules change all the time. And the, I'd like to put this though in the broader context that the the stated goal is that you want to foster domestic production, right? And the other goal, maybe not stated explicitly, is governments want to get reelected. And so if you put it into this context, government has a carrot and a stick to achieve its goals. And I look at tariffs as the sticks.
Yep.
I happen to favor the carrots, the incentives, but obviously government has both tools. On the carrot side, think about the deregulation initiatives. Or we talked about strategic minerals. Many of your viewers might not be aware that gold, of all things, has been elevated to be a strategic mineral. Well, it's
Yep.
not all that strategic. There isn't
I
so
didn't
much.
know that.
There isn't all that much industrial use in it. But what that really means is that if you're mining on federal land, that the government can expedite the approval processes. And
Yep.
so, and of course, a lot of mining happens on private land as well. But it's those sort of things where it affects things. But I would not be surprised that when you have a midterm election coming up in the US, we will see a lot more carrots than sticks, because ultimately that's what the administration wants, right? They want to boost the economy, and of course we have a substantial tailwind to the economy from fiscal policy being easy. We have a Federal Reserve that's on an easing path as well. We have a deregulatory trend, right? And so all of that is then competing with the headwind of tariffs. It's of course impossible to exactly predict how that's going to play out. But I would say that the markets have also gotten used to the style of the current administration. And while people might be aghast at the latest statement, if you look actually what's happening in the markets, it's a far more nuanced reaction that the area I'm focused on most, interest rates, haven't moved that much.
Yes.
There is one area, but I don't want to rant on here forever, that is underreported is the impact that tariffs has on interest rates and the currency. And if you'd like me to, I can expand on that, but let me first pause here.
I would absolutely like you to expand on that.
Yeah.
Yes. Sounds
So,
good.
so um, when people talk about tariffs, everybody thinks about how the flow of goods gets impeded. What people don't fully appreciate is that on the other side of that is currency. You are throwing a wrench into the movement of currencies into the country when you impede the flow of goods. Um, and that throws a wrench into this global machinery we call the exorbitant privilege. We have the world, the US is providing the excess liquidity, lubricating the world's financial system. And it's not like a light switch that gets turned off. But when you have in barriers to trade, what you're doing is you're making it more difficult for foreigners to finance US deficits.
Yeah.
And so the
Yes.
the logical reaction for that would be, well, then we got to spend less because then our deficits would be less and everybody's going to be living happily ever after.
Yeah.
That's, of course, not what's happening. What's happening is there's pressure on the Federal Reserve to keep rates low because in the absence of foreigners buying as many treasuries, there is upward rate pressure on the long end of the yield curve. When you put artificial pressure on the long end of the yield curve, there is a valve, it's called the currency. And so that's one of the key reasons why the dollar is moving higher. Now, none of these things are dramatic, right? Goods are still flowing and all that, but these things matter on a relative basis. And
Yes.
then when you go back to the precious metals markets, one of the reasons we have seen these outsized moves is because these markets are just so much smaller. People in the US are saying, well, why do we invest in a traditional 60-40 portfolio? And it's not like they're taking all the bonds and putting into gold, but on the margin, more money is allocated to precious metals,
Yeah.
and it has an outsized impact on it. And of course, the same thing happens with foreign central banks. They are quote unquote disincentivized to hold U.S. treasuries if they're hostile to the U.S. And of late, even some so-called allies have been taken aback of what's been happening with Greenland and the like. And it's not like the European Central Bank is just going to pile up on its gold reserves. But these things do matter on a marginal basis and have an impact on smaller asset class like precious metals.
Yeah, if I super generalize about the numbers, like the total debt globally is roughly 300 trillion, and you got at least 37 of those in the US, and the total production in the world is roughly a third of that. This is just super broad brush, so don't quote me on this. How does the debt affect the government finances in the US and other countries as well, and the link to interest rate, debt, and the currencies? So just again, macro view.
Well, since you're framing it in the terms of global debt, let me throw something out there that most people I don't think appreciate. Central banks are set to have the bazooka, and that is, of course, why we take care of the Federal Reserve and the like. But all this only works as long as there's confidence in central banks. If
Yes.
confidence were not there, they would be just zipping from a straw in the ocean. And so they can print an unlimited amount of money, but they are not in charge of the market if the market doesn't want to believe them.
Yeah.
Now, I like to point out that a lot of folks, especially on the precious metal side, oh, people don't trust the Federal Reserve anymore. That is absolutely false. You can actually measure that. We talked earlier about whether inflation numbers are accurate or not. Well, you have long-term measures of inflation in the markets. And especially there are some abstract measures. You go 5 years out into the future, what will inflation be the following 5 years? You can argue, well, who cares because nobody knows what that will be. But you do care because those are measures of confidence in the Federal Reserve or other central banks for the
Yeah.
equivalent, because if those so-called inflation expectations are anchored, it means the market has trust that the central banks will do their job. And that is what the Fed independence and the like
Yeah.
is about. It's those anchored inflation expectations. Now, the other side of that is that a when you have fiscal policy in order, then monetary policy doesn't have to be great, and you kind of get away with that.
Yeah.
But if fiscal policy is in shambles, even the soundest of monetary policy is not going to rescue you. Everybody remembers Mr. Draghi saying he will do whatever it takes. That's what central banks do, right? They are there to help keep that system. Financial stability is the biggest goal they have, and obviously helping the government, so to speak. Now, there's a lot that a central bank can do to kind of nudge the fiscal side to do the right thing or the wrong side thing. And Kevin Warsh, he has criticized the Federal Reserve by keeping interest rates at zero. The Federal Reserve was egging on the fiscal side to spend too much money. So there are things that they can do, but ultimately, of course, the politicians they get what they want. The question is for central banks whether they kind of have saying, hey, here is a printing press you guys can use if
Yeah.
that's what they do. And I think a lot of that has been happening since the financial crisis because they've jumped to the rescue of everything. It's one reason why I am really excited to have Kevin Walsh come in
Yeah.
because he's been critical of many of these things very consistently for 15 years. And I believe he will get the Federal Reserve out of many of these things. That's not going to affect interest rates tomorrow, but it makes monetary policy more efficient, and which is ultimately makes it cheaper for everybody, all else equal. And of course, we never have everything else
Absolutely.
equal.
Yeah, and ultimately, like trust is the currency here. So without the trust in the dollar and everything else, it will not work. So therefore, to have a person that is trusted by the financial community will also have some stabilizing factor as well. So I'm just saying that as a comment. So you haven't really had the chance to talk about what you actually work with. So a very humble man here. So having more than 4 billion US dollars in asset under management, working as a president and chief investment officer, and more. What do you actually do, and how can people find out more about what you actually do? Because we have been downplaying your role here substantially, so we are really grateful for the insights. Now let's love to throw that back to
Well,
you.
I'm the cat herder in chief, right?
Yes.
I do the same thing that anybody else who runs a business does. I manage people, and I happen to be enthusiastic. I do believe in what we do and then invest in my own products. But yes, to learn more about what we do, merkinvestments.com is our website. From there, you can get to our products. By regulation, I can't discuss those here too much.
Yep.
We have a free newsletter there. On social media, on Twitter or X, I'm at Axel Merk. What I like about social media is that I get kind of one can get out of one's echo chamber and get perspectives from you pretty much curate your own news by
Yes.
deciding of who you follow. But on the other side of it, obviously I do post there as well. I'm able to give real-time feedback on things that are happening in the markets and the like.
Yeah.
And so some people appreciate that. I have no claim that I'll be right. The one thing maybe to add is the value of following folks like me is not that somebody else or I has a crystal ball, but is to give people food for thought, to get you out of your echo chamber, to look at another perspective, and
Yeah.
then you can cross-check that with your own way of framing things, right? And so that's the way I would encourage people to use people like me or others. And then obviously, yes, look at what we do more closely at merkinvestments.com.
Yeah, so really good way to frame. So again, the good thing with Axel here is like he is not just investing, he's investing in himself for decades and learning from experience and working with investments since like early 90s and maybe even earlier than that. So seeing the cycles come and go, companies come, grow or go bust, and also to be specialized is really key. So again, he's been focusing on the precious metals, gold and silver and so on for many decades.
And by the way, you mentioned
And it's really had a strong kicker lately, but that's just because of the long term and consistency it plays. You had a comment.
yes. So I understand you often talk about investing in health and the like.
Yeah,
The best investment you can ultimately do is in yourself, right? You can buy an exchange traded product with a click of a button. Well, you have a far better potential for returns if you're actually in full control of what you invest in.
yeah,
And think of yourself as a fixed income generating machine. And it's one of the key reasons why a young person can take greater risk because you have that amazing future potential
yes.
of yourself. And of course, by investing in your health, you can extend the lifetime of that fixed income generating machine. So I just want to throw that out there as a
Yeah, no,
way of framing that as an
really good.
investment.
And
Yeah.
also, Ivan is in his early 20s, and I've been sharing stuff with
Yeah,
him for many
21. Yeah.
years. And why is it so important to invest both in yourself, health and wealth, but starting early And yeah, say whatever you want about compound interest, but please elaborate on why starting early to think about the future is important, even if maybe the best investment a young 20 can do is invest the money in their own learning. So feel free to comment anything at all.
Well, it's compounding, as I think you allude to, right? I mean, the power of compounding is dramatic, but it doesn't mean the other part of it is though it doesn't mean you have to pile all your money into the S&P 500, right? If you some of the most successful investors, I'm not giving investment advice here, have said, well, no, they're putting their money into the one thing that they're passionate about and they're
Yeah,
good about. If you understand something that can be, and that's why some. I mean, obviously, if you have a lifetime experience and start a business, some of the most successful businesses have been started then. But the nice thing about being young is you don't have dependents, you don't have children that you need to take care of. So you're able to take much more risk with a business venture that you might be engaged in. But ultimately, yes, I mean, life is about learning, and that can happen in various different ways. Most important thing is to stay curious and to actually do something, right?
yeah.
Listening is fine, but too many people are just watching and are never acting. So you actually got to execute and on the ideas that you have.
Yeah, no, I applaud you for sharing. Again, you're in a position where you don't need to share, but you do share here and now, and also social media and so on. And it's valuable that we also have content creators that speak from wisdom and not only for the clicks. You're also a father of four. What have you learned from your children?
Well, they keep me humble, I suppose. They are.
Good.
Yes, no. We have four children. They're all different. They are the youngest one just left the house to go to college, and some people are sad when they're empty nesters. I think it's fantastic. I have done my duty to society in that sense. I'm ready for the next step. But we
Yeah.
are very fortunate. We have our four children live regionally, and so we are generally healthy. The sort of concerns that we have are really minor, and so but the obviously as I understand you have a lot of family offices and similar in your audience and
Yes.
um, keeping good relationships with your family is tremendously important. Don't let pride get into the way of things. And just since we're talking about money here,
Yeah,
just if I can expand on that, it doesn't matter whether your family has modest means or substantial means. Talking about money is difficult in most families.
Yes.
And so when you have a death in a family and you have to deal with an inheritance and the like, um, it's it can destroy families because people feel like they get
Yeah.
cheated or this or that. And I would encourage any family, it doesn't matter whether there's going to be a big or small inheritance, talk about money, talk about these things, get people comfortable with these topics
Yeah.
because that makes then the discussion when the party is no longer around
Yes.
that has provided those assets to phrase it abstractly um, creates much less space for acrimony. And I have seen too many family relationships be destroyed. That this is something that I think we can rant about, kind
Yeah.
of the issues in the world, but think about the issues close to home and invest in your family back home.
Yeah, really, really well explained. And also, one of the biggest things we can give as parents is also daring to talk about money, entrepreneurship, sales, skills that you do not learn in school. And also, there
yeah,
are other ways than just like go to a good school, get a job, and work and save. There are other ways to make a dent on this globe, and I think entrepreneurs finding ways are super important. And so on. So feel free to comment on that. Conversations around the table back home, how that can help the children even more than money in their pocket.
Well, children are, of course, all different, right?
Yes.
And not everybody becomes an entrepreneur. Uh, Anybody successful, almost everybody successful, has to put hard work into that,
Yes.
right? And that's really, there is no shortcut. And especially since I think you have a European audience as well, Europeans don't work enough. Too many of my European friends are, when I talk to them, I said, what movie am I in, right? They are just trying to optimize the benefits they're getting.
Yes.
That is not how you build wealth.
Yeah.
You've got to roll up your sleeves and get the work done. Means different things for different people. You can be a successful artist, right? You can be a successful anything, but you don't become successful by working only a few hours a day and rolling your thumbs. Or, which I see in Europe, unfortunately, I just met somebody else again that get an education and then only work 3 months a year because you get away with it.
Yeah.
It just doesn't work. That's not good for you. It's not good for society.
Yeah. No, well put. All right. So, Ivan, any last questions at all? Otherwise, I'm about to wrap this up.
Just in general, incredible advice throughout the entire episode. And
I'll have
yeah,
plenty
there
of opinions,
probably is a
Joe.
big cultural there is a big cultural difference, I think, between Europe and America, and I think a lot of people in my generation have kind of given up, and they think that this is like a hustle culture and that it's a scam basically to work hard. But you know, them giving up, they're kind of scamming themselves because they're going to be a part of that bottom
But
statistic, which
yeah.
actually doesn't get anywhere.
So first, two things. First, I don't want to be too negative. There's plenty of young talent that does a good job,
Absolutely.
but our generation, or my generation, Frederick's and my generation, we have to do a better job at communicating the benefits of capitalism. What people have seen since
Yeah.
the financial crisis is a disgrace. And I can't blame young people for saying that system doesn't work for them. Well, it doesn't work for anybody. And it is not capitalism when you bail everybody out. When you have zero interest rates
Yes.
and you come to the rescue of banks that mismanage interest rate risk, when you,
Yeah.
it's a, you have to provide but the nice thing is you can change it, right? You can provide incentives for that success is rewarded. And but if you're just jealous of somebody making a little bit more money than somebody else, that's not going to get you very far.
Yeah. Yeah. All right, Ivan, we'll do a round table here. I will say some few words, and Axel and Ivan, you will close out this session. So I will start first. Super happy, Axel, to have had you on the podcast. Wealth of experience that you can clearly articulate and make it understandable. So job well done. Over to you, Axel.
Well, thank you. It's just been a pleasure to meet you. I hope I was able to engage some in the audience. Feel free to engage with me. Social media is the easiest place, but I'm also known to be quite responsive if you submit the message on our website and then try to continue the discussion.
Great, Ivan.
Yeah, absolutely incredible. It's been really good to have you here. I've learned a lot in just a 1 hour podcast, which is kind of unusual. I have a entire page of notes and yeah, this upside down. I'm just very, very happy that you're here to join us today.
Thank you all.
All right, my pleasure.